out Adrian Mowat an edited excerpt of an interview.
I think the environment for EM, particularly with the politics in Latin America, with AMLO president-elect in Mexico, we've still got a presidential election to get through in Brazil, concerns around Turkey, which sort of predate the risk that sanctions get imposed by the Americans on Turkey related to the imprisonment of that particular pastor. So I think let's not say that EM is doing better. I think there's some signs of a little bit of recovery in an asset class that sold off quite a lot. If you look at margin positions, short positions in markets like Hong Kong, which is effectively what the international China indices, those are at very high levels. So I think we're still in a difficult period for emerging markets.
Would you say, though, that selectively, albeit the worst may be behind, because yes, it's those 10, 15 stocks within the Nifty which have moved, but the fact is that they've taken the Nifty all the way to that all-time top, and the broader market as well has staged a comeback in the last month or so?
Yes, I mean, you're certainly right. When you look through the mid-cap and the small-cap indices, which have been big relative underperformers. You know, when I look at the Indian Nifty index, the large cap index, it really was going nowhere up until late June and then has begun to recover, led by a limited number of stocks. We've got a broadening of the market in the last couple of weeks. I'm not sure if there's a specific macroeconomic factor that would justify that. You know, as we look through the results season, I mean, it's a struggle to give a summary about this results season in that you know, there's a very, very mixed bag of numbers coming through.
Have you been surprised by any of the earnings report in this quarter? Which are the segments where you believe you know, you're getting a sense that you know, you're getting a bit of a tailwind which is helping lift sentiment across the sector?
Well, you know, I suppose it's really summarized in the relative performance of stocks. So you're getting surprises coming out of some of the key IT names. Reliance has been doing well year to date. And I think that the share prices are probably telling you that. I think the bank earnings are always going to be a bit of a struggle because we're going through such a protracted period of provisioning. And those headline provisioning numbers are really driving it. So, you know, some of the private sector corporate banks, perhaps we're getting downside surprises from those. But it's all this credit quality issue that India continues to work through.
But overall, do you see any challenge, Adrian, emerge for consumption as a basket?
I think where we might, though, get some positive surprises is that as the GST system matures and companies have had more and more time to implement the cost savings, the efficiency improvements, then you might get some offsetting factors there.
Would you believe that a large part of the India call is now more defensive in nature because the investment-led themes have not picked up? So would it be more about IT, pharma, which have started moving, and, you know, a bit about the PSU banks as well, which, you know, as the trade has not played out, and I don't think there's much conviction driving it, but even so, there could be interest building in there.
Yes, so we've got a trend that's been in place in this market in terms of the winners versus the losers. And the question is there a catalyst to change that trend at this point in time? And I don't see anything in the macroeconomic numbers, in the direction of the currency, interest rate policy, etc., PMI numbers that would necessarily change that. So I think you continue to be in this environment of a relatively narrow market where investors are paying a premium for defensive earnings and are also crowding into the stocks that have had the relatively strong earnings revisions.